Good morning, everyone. Welcome to another episode of the podcast yet to be named. Alan, we might just have to start calling it that. That might just become the name. I think.
Yeah,
We'll
if
we'll,
the
we'll
shoe
see, but
fits.
right, the shoe fits. Right. Matt Bouts, certified financial planner, and Alan Nays of Guardian Business Advisors, uh, CPA. We're here putting our heads together for all things financial and tax related for business owners. And our topic today, Alan, is tax penalties. The extension
Right.
deadline just ended, and we wanted to talk about that because we sure there's a person or two that is wondering, oh, what does this mean if I paid my taxes late or other things regarding penalties. Before we jump into that, um, on a personal note, Alan and I both have kids. I don't think we've ever talked about this kind of stuff. Married, family is an important thing. I just wanted to say that this morning, I'm coming into the podcast hot, getting my kids out the door to school. Alan, you got little kiddos too, right?
Yeah, 3 and 7. It's always a challenge getting them out the door, going to school. It's
Yeah,
like
you're you're
a
you're 2 year.
wrestling match. Or
It's a wrestling match.
yeah.
It's like do you know how hard it is to like zip up a coat from the other direction? Like literally, I thought I was gonna be late this morning
You
because
you're already wearing coats up there in Minnesota?
oh yeah, it was 40
Okay.
degrees this morning. Yep,
Oh, yeah,
yep.
yeah.
Frost on the windshield, scraping it off. The whole
Holy cow, it's here
Mhm.
already.
Yep, that's absolutely right. Um, all right, let's pivot into this.
Yeah,
Penalties, tax penalties. So we just
right.
got through the extension deadline, 10/15. And if you're like many owners, just like me, I waited until early October to file everything. Um, and getting your taxes done, a lot of times tax preparers will let you know, "Oop, you underpaid, or you didn't pay, or you didn't pay enough, or you didn't
Right,
file. Hopefully you didn't do that's not the case, because that's a steep one. But Alan's going to be
right.
diving into all the different penalties. And so why don't you lead us through that there, Alan?
Sure. Well, there are 3 main penalties people need to be aware of. And the first one is exactly what you said. It's a failure to file is what the IRS calls it. FTF is the acronym they use, and it is a late filed return, a return. Either you didn't file an extension, filed after the April 15th deadline, or you did file an extension and you missed the October 15th deadline. So that's what they classify as a late filed return. And the IRS pushes really hard to get people to be what they call compliant, meaning to get the return filed. Interestingly enough, they don't push as hard to get people to pay, although they do push hard, just not as hard.
Hmm.
So what's the bottom line there is it's a 5% penalty on the tax due up to 25% of the total tax. So it's 5% per month. So in 5 months, you've met the maximum penalty. So it could
Mm,
be pretty aggressive, pretty aggressive. And
got it. So
I
if
don't
I
know
owe
about
100 grand, I could, and if I don't file my tax return for 5 months, I'm paying an extra 25 G's. Even if I get it all done, is what you're saying.
yeah, that's right. If you get it filed late and you owe 100 grand, you're going to pay
Yeah.
that big penalty. And I don't know about you, Matt, but I don't like giving a tip to the IRS. So,
No.
they no gratuity to the IRS. So I don't like to pay penalties. I don't like to see my clients pay penalties.
Yeah, gratuity, that's one way to put it, but to give gratuity, I feel like you'd have to be provided some level of service and actually receive something. And I know, are we getting something for our money at all? I don't know. No,
Yeah.
definitely don't want to be paying a tip. Definitely don't. And yeah, and I think that, Alan, you'd agree with me if you say, like, look, if you're not prepared, you don't have all your documents, do your best to throw them together with a professional, because you can always amend your stuff later on, and then you're all compliant, right?
Right. Yeah. I mean, we have a responsibility to file an accurate return. Um, we we can't we can't knowingly file a false return.
Right.
But, we can rely on estimates and there's things we could do to help speed up the process.
Right.
Plus, if you have an experienced tax pro that, is engaged in working with you, a lot of times they've run into similar situations with other clients and they'll be able to help you navigate through that. How do I get this information? What do I do? Um, just to sort of push it over the line to get the return filed.
Right. And I think the wording is, if I'm not mistaken, is what you're signing off in your tax return is to the very best of my knowledge, everything that I've submitted is accurate. And
Yeah,
if you're not organized in your head or on paper, when you're filling that out, as long as you're doing a good faith effort to make it as accurate as possible, and then maybe get it more accurate later on with an amendment. But I think that's the key, if I'm not mistaken.
that's right. Yeah.
Yeah,
Yep.
yeah, good. So make sure you file your tax returns. If you haven't done it,
Yeah.
get a professional to help you ASAP because it's painful.
Yeah.
Painful. And but that's only the first one. What's the next one on the list, Alan?
So the next one is what we call failure to pay, FTP. And that's exactly what it sounds like. It's pretty straightforward. It's failing to pay the tax on time for the return that you did file. And it's if you haven't filed a return yet, that's a completely different scenario. And I would urge you to seek the help of a professional and get that return filed right away, because that's a whole nother situation. That's a whole nother podcast episode that we don't need to go into right
Right.
now. But that creates all sorts of other problems for you. So get your return filed. But I mentioned the penalty on failing to pay isn't as extreme as it is the failure to file. And so the bottom line there is it's the failure to pay penalty is 0.5% for each month, up to 25%. So the IRS is very aggressive on getting your returns filed, and then I guess they just assume, hey, we'll collect the tax at some point. But yeah, it's a smaller penalty, so it seems like from their actions that they care more about getting the return filed than getting paid.
Yeah.
As interesting enough that is.
Yeah. No, it makes sense. They can't come after you if they don't know you owe it, and until you do your tax return, they
Well,
have no idea that you owe it. Right. Once you tell them, hey, I owe you some tax, they can sick their dogs on you, if you want to put it that way. Right.
right. Eventually, they figure it out for you.
Right.
SFR.
Right.
They
Yes.
file a substitute return. So for a short period of time, let's say they don't know what you owe. But
Right. That's very true. Yes. I
yeah.
was not implying don't do your taxes there at
Right,
all.
right.
In the audience.
No.
Um, so let me ask you this, just a very technical question. I had a client ask me this, and I didn't have a great answer for him. So let's say, and this is something to clarify with everybody.
Uh-huh.
We know that you can extend your tax return, right, until personal till October 15th. The corporate one is till September 15th.
Right.
The normal dates are March 15th and April 15th, right? You just sign a document, get it into the IRS, tell them, hey, it's going to take me extra 6 months, no problem, fine. But they do require, if you owe taxes, that it be paid by those earlier dates, right?
Yep.
We know a lot of people do extensions, and sometimes they under this will lead us into our I think our third category, which is underpaying your taxes.
Yep.
Let's say you do the extension, you get your tax return done in September or October, and let's say you didn't make any tax payments over the last year, or you underpaid. How
Yeah.
long after you file a tax return, like say it's October 13th, so you filed it on time in front of the extension,
Yep.
but you didn't make a payment with October 13th, like because you
Yeah.
didn't have the money maybe. How long before the IRS starts saying, coming after you in more significant ways, right? Do you have a month? Do you have 3 months? Do you have 6 months? Answer me that, Alan.
Okay, that's a good point, and I'm glad you bring it up because it's something I want to emphasize about the failure to pay penalty. Is that when you do file an extension, and it's an automatic extension, by the way, you file the
Hmm.
paperwork, but it's automatically granted.
Right.
And in my mind, there's absolutely no downside to filing an extension. So if you think you're going to be late, let's avoid that failure to file penalty and just get an extension filed and push that deadline down the road. But it is not a extension to pay. It's an extension to file. So your taxes due on April 15th, as it always would be. So that's an important distinction to make. And so to answer your question directly, Matt, is well, help me out. Give me a little bit more details about the situation. So I want to make sure I
Yeah.
give you an
So,
accurate
so
answer.
this particular person didn't make any estimated payments. All right.
Uh-huh. Yep.
Kind of the first year that they've had success in business, and so they're just like, oh, forget it. I'm running with it.
Oh,
And
okay.
this would have been in 2023, right? They had some
Right.
profits. Didn't make any payments all year. Didn't make any payments on April 15th. Extended their return, getting their taxes done. They realized, whoop, I owe some money here. And
Yeah.
the question was, okay, do I need to make this payment with the tax return? I'm like, no, you should have made the payment 6 months ago. So
Yeah.
yeah, get it
April
in lickety.
15th. Yeah.
So
Yep.
get it in lickety split. Otherwise, it's more penalties. And
Right.
their question to me was, if I don't make the payment for a month or 2 months, at what point does the IRS start doing more nasty things like garnishing wages or garnishing bank accounts? And I'm sure they'll send a nasty letter pretty soon after filing the tax return. But that was his question.
Yeah. Okay. I sort of understand that now. It's immediately, actually.
Hmm.
The clock starts ticking, and these things are done on an automated basis at the IRS. The clock starts ticking on the interest and the penalties and anything you might potentially owe immediately after the deadline.
Right.
Now, how quickly they begin compliance activity,
Hmm.
collection activity,
Hmm.
that's that's a really tough question to answer.
Hmm.
Sometimes it's immediately, sometimes it takes them years, believe it or not.
Okay.
But I want to emphasize the clock is running on the amount you owe immediately. So it's
Right.
like, well, how long do they get to you? Well, who knows? And
Right.
they have all sorts of tools in their tool bag to
Right.
um to come after you, liens
Right.
and levies and all sorts of nasty stuff. But
Right. All not good things. Yes.
yeah, I always
Um,
joke like the IRS is the strongest collection agency in the country because no other kind of debt can they put you in jail for, and they can certainly do
mhm.
that.
Yeah, one of my was it Blade Runner? Wesley Snipes, I think, spent some times in the lockup for not
Oh,
is that his
yeah.
name? Yeah.
Well, that was a little bit different scenario,
Oh, okay.
but
All
yeah,
right.
you're absolutely right. It was tax related, but it was tax fraud. He was just
Oh, yeah, fraud. Yeah, don't
yeah.
lie. Don't lie about your stuff. That's a guaranteed as they say, a guaranteed road to hell, right?
Yeah, I mean, we all like to push the limit on things. That's why we're business owners, right? But
Right.
it's sometimes surprising how little the dollar amount can be before they will pursue
Yeah.
criminal prosecution.
And it's because I mean, and Alan, maybe you think on this is, what I've seen is you have to report all of your income you have
Yeah,
to let them know about what all of your income is, even if it's criminal activity, technically. Like,
yeah.
you're supposed to report all that.
We're talking Al Capone now.
Yeah,
That's
exactly.
what he
Al
went. He
Capone.
got locked up. They couldn't get him on anything else, but they got him on
Right.
tax fraud.
And obviously, you have to make your best effort to do any of the deductions and all the work that Alan and his team do. You got to make your best effort to do that right. But generally speaking, the IRS might disagree if it's a gray area. You shouldn't have taken that deduction. You shouldn't have done that. And then
Yeah,
it becomes a back and forth with the IRS. If you're hiding income and they find out about it, bad news because it's
yeah,
fraudulent, right? If you're trying to do that on purpose. So
right.
there's gray areas, and you want to push the envelope in the gray areas, and there's just no reason to do it. A, it's against the law, and B, with a good tax team, you can get this stuff under control. So
Right.
there's a right way to do it. I like to say that the tax code is like a big playbook on what the government wants you to do, right?
Yeah.
So
It's not as black and white as what you might think.
right. Exactly. Yep. So we did the first two. There was a third one we kind of touched on it, which is underpayment of taxes. I should have asked my question after this third one, Alan, because
Yeah.
it kind of
Yeah.
is in line with that. But yeah, underpayment of taxes.
So the IRS requires that you make 4 estimated tax payments a year: April 15th, June 15th, September 15th, and then January 15th of the following year. Um, so they push for sort of a pay as you go kind of situation. If you don't meet their guidelines, they can assess the third kind of penalty, which is an underpayment of estimated taxes. And as business owners, sometimes our income is up, sometimes it's down. We don't really know. The only real guideline we have to follow from the IRS is you at the end of the year, you had to have paid 90% of the current year. This is the lesser of 90% of the current year or 110% of the previous year. If you fall within that category, then you will not be assessed an underpayment of tax penalty.
Mm-hmm. Right. Yeah. So to put that into perspective, let's say one year, you had $50,000 in profits, right?
Yep.
Um, and you said you got to pay 110. Oops, doing some math here. So yeah, so what that means is in the next year, let's say you double your profits, you're up to 100 grand, right?
Yep.
In that year, you're making the 100 grand. So 2024, right now, this year, you got to make estimated payments of whatever's highest or whatever's the lowest. What did you
The
say there?
lower,
The lower.
the lesser of, yeah.
So 110% of 50,000 is 55,000. So you got to pay taxes based on a $55,000 income level, and then
Well,
you
you also have to meet the 90% of the current year too.
and the 90%. So it is the 90%. So it'd be as if you made 90,000 and be at that target, right?
Yeah.
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 Okay. I wanted to clarify that. So yeah, so you got to be on top of this. You got to if you're killing it and going, that's you need to be communicating that proactively with your tax team if you want to be on schedule for your taxes. Because you just do it based on the previous year. In the scenario,
Yeah.
you could be behind, right? And that's it.
Well,
That's a
I would recommend meeting quarterly just to evaluate just that, just a quarterly tax planning meeting with your tax professional,
mhm,
just to monitor, hey, here's what the last quarter did. Here's where we stand. What do I need to do? This is what's, forecast out what's going to happen for the rest of the year and sort of get a game plan. You got to be, proactive about it.
mhm.
Um, not just for the underpayment of estimated tax penalty. That's definitely a thing, but it's you got to know what you're up against as far as tackling your tax liability too.
Yeah, and I would say it's twofold. It's not just your tax liability. You have to have that is the first thing you got to have in order. If you're getting
Right.
crushed by taxes, frankly, you're not running your business well. You got to have your taxes in order and minimize them as much as possible. Be as efficient as possible. And then you got to make sure you're paying the IRS, keep them off your back. But then when you're meeting quarterly with a business advisor who's a tax expert, it's going to allow you to have a really clear image of where you're headed with your business. And it's going to allow you to make strategic decisions around
Yeah.
what you're doing next so you can continue to propel growth. Right. And that's the other aspect of meeting regularly.
Yeah,
Yeah.
absolutely.
Um,
So one other thing we didn't talk about is interest.
Interest. Yep.
So, and it's from day one, like we mentioned earlier, that they start charging you interest the day that after the tax is due. And they don't just charge you interest on the tax; they charge you interest on the penalties as well.
Mm-hmm.
So, if you are non-compliant, you don't file your return, you don't make any estimated tax payments, and you don't pay, you start to accumulate huge penalties, and it could be half of what the taxes do. Huge penalties and interest combined,
Mm-hmm.
and you can get yourself in a really bad situation.
Quickly. Yep.
Yeah.
Yeah. And then can you talk a little bit about I know that let's say you are in trouble with the IRS. For example, that client that I was just talking about, that real world example, not a client, but it's a real world example that I know someone that's dealing with it right now. Um, when it comes to that, the IRS, as long as this is not habitual,
Yeah.
the IRS wants to work with you and they will happily set up a payment plan with you that is quite manageable. And
Yeah.
Alan, why don't you talk a little about that? And the key is communication with the IRS, and your tax team can help do this for you.
Right.
And they want you to keep your business profitable so they can tax you into the future, right? So they want to
Yep.
work out something with you that's manageable, and maybe just talk about that
Yeah,
Um,
there are things you can do.
yeah.
So first of all, if let's say you're in a scenario like, well, I can file the return, but I don't have the money for the tax because I'm waiting on a big payment or something like that.
Hmm.
Some people, and I've seen it done before, they just sort of bury their head in the sand and don't address the situation. Here, what I would recommend: go to your tax professional, get the return filed, and with the return, file an installment agreement.
Hmm.
And there are certain guidelines based on the amount of tax due. But if you're under $50,000, it's an automatic installment agreement you're granted. It's what they call streamlined agreement.
Did everybody hear that?
And
Automatic. So there's no
yeah,
reason if you can't pay, automatic under 50,000, the IRS will set it up for you.
yeah, streamlined is what they call it. And
Hmm.
if you're over 50,000, it's still available to you. It's not streamlined, but they're granted every day.
Right.
So Um, if you do that, you avoid that failure to pay penalty because in the IRS's eyes, you're compliant. You
Hmm.
filed your return, you've made arrangements to pay it via the installment agreement. There's no failure to pay. So right off the bat, you're going to be saving yourself, a bunch of money there. And you don't have to worry about the IRS getting a bunch of nasty grams in the mail from the IRS and leaning and levying your account because you're in compliant. All's well as far as they're concerned.
Right. Yep. Yeah, and that's what I would say is communication is key.
Yep.
Communicating with the IRS, Alan, I would say is a pain in the ass, right?
Yep.
Their customer service is not the highest levels. No
Good luck
JD,
getting good luck calling them, getting through.
yeah,
It's
they
tough.
haven't won any JD Power customer service awards. The IRS, no. Uh, so the point though is, having a professional team that knows how to communicate, and that's what they expect. Communication. What's the status of this? How are we doing?
Yeah,
And as long as you're engaged with them in a good faith way,
right.
then you're going to be able to manage that. And so this is the kind of thing. If you have tax liability, it means you've got a profitable business, which is a great thing. You just
Yeah,
got to get more organized and manage your cash flow better. And that is exactly what a collaborative, professional broad team can help you do. So,
yeah,
um, if it's not Guardian Business Advisors, make it someone else. But that's the reality is you want to have a team of folks that are getting this in order for you, so you don't have to think about it, and you can focus on doing what you do best, which is your business, right?
right.
And just make more money. Um, Good, Alan. This is good stuff. What else? What else we want to add?
Well, there are a couple. So let's say you do get tripped up, and you don't get everything filed and paid on time. The IRS does offer some relief. There has to be what they call a reasonable cause for the cause for why the taxpayer didn't meet their obligation. And there are a couple ones that are sort of easy to tee up. Fire and natural disaster. So if you're in a hurricane or your building burns down or something like that, um, you know, feel for all the people that are dealing with the hurricane now. So that's why I bring that up. So they will not be assessed any penalties. Um, your inability to get records that is outside of your control, um, a death or serious illness, the IRS system issues. So there are a couple easy ones that the IRS will just grant you like right away. Like, okay, we're gonna what they call abate the penalty. They'll grant an abatement.
Hmm.
Um, Now, I've had people come to me and like, oh, I've been assessed a penalty. What can we do about it? So here are a couple things that will not get you out of the penalty. So if you relied on, let's call it incorrect advice from a tax professional, doesn't get you out, unfortunately.
Hmm.
And it happens all the time, but
Yep.
uh, doesn't help. Lack of knowledge. Well, I didn't know I needed to do that. It's your obligation. That doesn't get you out either.
It's like the police officer. I didn't know the law, sir. Well, tough shit,
Yeah.
right?
Well, right. You're, yeah.
Yep.
So, there has to be sort of an extenuating circumstance around that. But the good news is like, okay, well, this is a one-off event, right? They will grant something called a first time abatement. If you haven't had any issues in the previous 6 years, they call it first time, but that's not the best terminology for it. It's no issues in the previous 6 years, you get a first time abatement.
And when you say
So
no issues, you mean never a late payment, just like no issues whatsoever.
Yeah, what the IRS considers to be incompliant. So
Yeah.
you've paid, you've filed, you've paid, and
Yep.
everything is hunky dory,
Yep.
and you haven't been assessed the penalty.
Got it.
You'll get a first time abatement. It's sort of a slam dunk there.
Okay. Cool. Yeah. All right. So, long story short, pay your taxes.
Yep.
And because you must pay your taxes, make sure you're paying the littlest amount as legally possible. And if you're in tax trouble right now and you don't know what to do, it's a dreary feeling. I've been there. First year I made business or made money in my business, I was not thinking about putting money away for taxes. And I'll be honest, I did an installment loan. This is way back in the 2011, 2012.
Yeah.
Um, and it was because I was unorganized. So this is not don't stick your head in the stand, as Alan was saying. Get some professional help. There's a light at the end of the tunnel, and if you have taxes that are owed, it's because you're running a profitable business, and this
Yeah.
you can course correct, but you got to do it. So good stuff, Alan.
Yeah.
We will be
Hope
on.
it's helpful.
Yeah, we certainly do. We'll be on again next week, and dare we opine on the upcoming election? We might be talking about that and kind of what to be thinking about as it relates to that and tax policy and the investing world. But until next time, everyone, thanks for being here. Alan, we'll see you next week.
Yep. See you, Matt.